Okay, so Palantir just dropped an earnings report that has Wall Street, well, completely losing its mind. People are buzzing, they're baffled, and they are deeply divided. So we're going to break down these absolutely explosive numbers, and we're going to tackle this audacious claim from their CEO that they're not just another tech company, but a category of one. The big question here is, are we looking at the future, or are we just watching a classic bubble inflate right before our very eyes?
Look, to really get Palantir, you first have to get its CEO, Alex Karp. He's the one who sets the entire tone, and he does it with statements just like this one from their latest earnings call. It's this unapologetic, almost swaggering confidence that is just so central to their entire story.
But, okay, beyond all the bravado, what about the actual numbers? I mean, Karp himself called them bombastic. So let's take a look and see what these figures really tell us about how the company's doing.
All right, first up, a staggering 70% aggregate revenue growth. That's for Q4 of 2025. Now, you have to understand, for a company of Palantir's size and maturity, a number like this, it's almost unheard of. It just doesn't happen.
And get this, the growth is really centered in one key area. If you look just within the United States, that number jumps to an incredible 93%. I mean, their home market is absolutely on fire.
And this isn't just some one-off lucky quarter either. They're actually projecting 61% revenue growth for the entire next fiscal year. So what's really interesting here is how this stacks up against, the normal industry standards.
So in the software world, there's this thing called the Rule of 40. It's kind of the gold standard for a healthy, growing company. It's pretty simple, actually. You take your revenue growth rate, you add your profit margin, and that number should be over 40. And trust me, it's a really tough benchmark to hit consistently.
Right, so Palantir didn't just hit the rule of 40, they completely blew past it. They obliterated it. They are claiming a rule of 127. I mean, a number like that, it just forces you to step back and ask, are these guys even playing the same game as everybody else? And that question right there brings us straight to their core thesis. See, to Palantir, these numbers aren't some weird anomaly. No, they believe this is the logical outcome of their unique philosophy. They claim that they are an N of 1, which basically means a category of 1.
So what does N of 1 actually mean? Well, it's Palantir's way of saying, hey, we have no real competitors. They genuinely believe they're solving a problem that literally no other company is equipped to handle, and in doing so, they've created a market where they're the only player.
And this slide really shows how Palantir frames the entire AI market. On one side, you have what they call commoditizing cognition. That's basically everyone else, selling these generic AI models that cost a ton but don't provide a whole lot of unique value. But then on the other side, you have their focus, scaling leverage. That's all about using AI to deliver real, tangible, operational results. It's an incredibly bold claim, and it kind of paints the rest of the industry as just being in a race to the bottom.
And this quote from the CEO really gets to the crucial point. When he says they've inverted the stack, what he means is that the AI models themselves, they're becoming commodities. The real, defensible value isn't the model itself, but how you actually apply it to the messy, complex reality of an organization. So when Karp uses that wild phrase, impregnate the world with AI, he's talking about embedding their tech deep into a company's day-to-day operations through their own unique framework. Okay, so how does their tech actually deliver on this promise of unique value? Well, it really boils down to two key concepts, something they call ontology and another called Hivemind.
Let's start with ontology. The easiest way to think about it is like creating a digital twin of an entire organization. It's this foundational layer that maps out and connects literally everything, all the data, the operational logic, the supply chains, even that tribal knowledge that's usually just in people's heads. It puts it all into one single, coherent model. And really, without this, AI is just a super powerful tool without a map. It doesn't know where to go.
And then, sitting right on top of that digital twin is what they call Hivemind. This is the AI brain of the operation. It uses that ontology to do more than just answer questions. It proactively looks for hidden opportunities, it develops brand new solutions, and it pushes the whole organization toward what they call enterprise autonomy. And just to give you an idea of how confident they are in this, their CTO mentioned that Hivemind can cook up a totally bespoke demo for a potential client just by scanning its website and public info. That's pretty wild. Okay, so let's recap. The numbers are explosive. The tech narrative is super compelling. This should be a slam dunk, right? A no-brainer for investors? Well, not exactly.
And that brings us to the huge debate that's raging on Wall Street right now, where the verdict is anything but unanimous.
Yeah, it really is the question every single investor is asking themselves. And the answers they're coming up with, they couldn't be more different.
I mean, just look at this. You've got firms like Truist and Wedbush that are all in. They've got buy and outperform ratings with price targets way up in the 220s, 230s. Then you've got UBS, kind of on the fence with a neutral rating and a $180 target. And then, all the way on the other end of the spectrum, you have RBC Capital, holding a sell rating with a price target of just $50. 50. This isn't just a simple disagreement, folks. This is a fundamental clash of worldviews on what this company is.
So this all boils down to two completely opposing narratives. The bull case, right, the optimists, they say Palantir is the clear AI pure-play victor. They point to that accelerating commercial adoption and growth that is, frankly, inexplicable by any normal standard. But then you have the bear case. They're pointing to a lofty PE ratio, which means the stock price is just incredibly high compared to what the company actually earns. A classic sign of an overvalued, maybe bubbly stock. They also point to a lot of insider selling, which is always a red flag for investors, right? It could mean the people who know the most about the company are cashing out. And the tricky part is, both sides have really compelling data to back up their arguments.
But if you ask Palantir, they'd say this whole debate misses the real story. For them, this isn't just about quarterly earnings or stock prices. No, they see it as being about a fundamental shift in global power. It's an AI arms race.
And this quote right here from their earnings call, it just perfectly frames their entire worldview. They literally said that the AI haves, their customers, are defining the future, while the AI have-nots are just fighting for survival. So in their narrative, buying their software isn't just some upgrade, it's an existential choice for your company.
And they see this divide playing out on a global scale, too. According to Palantir's leadership, the US and China are the clear leaders. They're the ones rapidly adopting and effectively using AI, but at the same time, they claim that key allies, in Europe and other places, are falling dangerously behind because they're either unable or unwilling to make that necessary technological leap.
So, at the end of the day, we're left with this massive question. Is Palantir, with its absolutely bombastic numbers and its whole N of one philosophy, are they truly defining the next era of technology and global competition? Or are we just witnessing a masterfully told story that's fueling what could be a future classic bubble? I mean, that really is the billion-dollar question, isn't it?